What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some other notable names on the market, names such as QQQ, Apple, Tesla, Meta, Microsoft, and Google. Microsoft and Google both reported earnings today, so we are going to talk about how to navigate their stock and where we expect their stock to go from here. For Meta, which is expected to report earnings today after market close, so in about 10 minutes my time, we are going to have a live reaction to Meta stock, and we're going to talk about some projections after their earnings depending on how their stock moves. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that SPY is once again back below the 200-day moving average. So if you've caught any of our recent videos, we've talked about the 200-day moving average and how important that line is to act as a support. And so far, buyers are failing to act as a support on this level. So you can see that the last time we tested this level, buyers were able to come in and buy the stock up. However, in this case, as of today, we are back below that 200-day moving average, and it can send us a lot further down. And here are some key levels to watch if you are looking at SPY going into the rest of the week. We will be updating these levels on our video coming Sunday, so make sure you check back in. First of all, we have a support at 417. The reason why we have that support is because that is exactly where SPY reversed to end today. However, that 417 support can be broken if Meta ends up taking the market down in after hours. So we're going to have a live reaction to that later on in this video, and we're going to see if SPY can sustain that 417 support into the after hours. If SPY cannot hold 417 going into tomorrow, then the next available support is going to be right around 412.45. And then after that, we have a support around 409. So bears are controlling SPY as long as SPY is trading below 420. And the reason why 420 is such a pivot point is because that was around the same exact level in which we moved back up and sharply saw buyers come in. The fact that we're below this level, it means all the buyers that bought it up have given up their positions. And right now, SPY is trading below that pivotal point. But it's not enough for buyers to rescue SPY back above 420. They're going to need to move it above 426.75 in order to regain full control. And the reason why we have that 426.75 is because that was last Friday's major rejection before we sold off. So buyers are going to need to get it above this level in order for them to take any kind of control back and move it towards 432.80. Now, before we jump into the next stock on our watch list, let's go ahead and talk about SPY on the weekly candles, which we have yet to talk about in our videos. And the reason why we're bringing it up is because many traders may be missing the fact that SPY is back right above the 50 and the 100-day moving averages on the weekly chart. So the most important moving averages you can have on your chart are going to be the 10, the 20, the 50, the 100, and the 200-day moving averages. If a stock is trading above those levels, then they are acting as a support. If it is below them, then they are acting as a resistance. Exactly how the 10 and the 20-day moving averages here acted as a resistance and pushed SPY down, the 50 and the 100-day moving averages here can act as a support and push SPY back up. So keep that in mind when you are looking at the weekly candles. Make sure that on Friday you pay attention to where the weekly candle closes. If it closes below these levels, then SPY can move a lot further, especially if next week's candle on Monday opens below that level, then it will likely send SPY further down. Now let's talk about QQQ and talk about its levels. QQQ on the weekly candles doesn't have much support here. In fact, it is looking like it is creating a bearish head and shoulders, and the last shoulder is being formed. On our last video, we talked about the fact that QQQ is likely going to move below this level because we already saw SPY moving below its previous low. And lo and behold, QQQ in fact did move below that level as of today. Here are some key levels to watch on QQQ if you are watching the tech index. First of all, we have a support at 349.75. That is going to be the closest support. And the only reason that's a support is because that's where it bounced today. But remember, Meta's earnings post hours today can definitely impact where it goes. If Meta drops on earnings, that means QQQ will likely fall below that 349.75, and it will have to rely on the very next support for a potential reversal. If it breaks below 347.30, you can clearly see on the weekly candle that there's a long move down to that 50-day moving average, and it's going to be right around 330 to 336 to where our next downside price target is. Now, if you are trading puts or calls, you want to make sure you're giving yourself plenty of time for these to come through to their price targets. It may take quite some time before QQQ moves towards that 336 level, even if it breaks below 347. So keep that in mind. Make sure you're giving yourself plenty of time when you're taking on positions. The next stock on our watches is going to be Apple, which did not report earnings yet. We will be updating Apple before its earnings, which is expected in the next couple weeks. But for now, we're looking at Apple, and we can see that Apple is trading right above that 200-day moving average. So Apple is one of the most valuable stocks on the market. Where it goes, typically the market follows. And if the market goes in a direction, Apple typically follows. And so we already know that SPY broke below its 200-day moving average, and Apple is right above that 200-day moving average. And so if Apple breaks, the entire market is likely to follow down, and it will continue coming down. Here are some key levels that we're watching on Apple. And you can see that from our last video, these levels did not change much. In fact, they're still the same exact levels that we've had, with the support being at 167.62. That is a support below the 200-day moving average. So if it does break this level, it means Apple is now below the 200-day moving average. And then to the resistance, we have 174.85, 177.85, and of course 182.35. Now 182.35 is a major resistance because of two reasons. First of all, we have this obvious rejection here where we can see that buyers were not willing to pay more than 182.35 on this attempt, which makes that a key resistance point, and Apple will need to move above that level in order for it to regain confidence. But not only that, the 182.35 is also right around that 100-day moving average. So remember, in the beginning of this video, we mentioned the fact that when a stock is trading below a moving average, that moving average would act as a resistance point, which is exactly what happened to Apple here on the 100-day moving average. Right now, the 200-day moving average is acting as a support, as it did here. It reversed the stock up, but right now, the fact that we're back at it in such a short period of time, that is not a good sign, and it will take a lot of force for Apple to move back up. That force is likely to come from its earnings, but it does not guarantee that it will. The next stock on our watches is going to be Tesla. There's only 3 minutes till Meta's earnings, so we are excited to head into that. But before we get into Meta's earnings, let's talk about Tesla. Tesla is forming what is known as a bearish flag after earnings. Of course, Tesla is also trading below the 200-day moving average. You can see that there has been a battle between both sides to get the stock back above it. But so far, sellers are taking control and buyers are not able to keep their position. So here in this case, here are some key levels to watch for Tesla. First of all, you can clearly see, and this is the same exact level that we had drawn out on our previous video, Tesla came into around 202.40. You can see on this candle here before it bounced, which was exactly our support from our last video. And you can see Tesla has been consolidating between the 202 and 222 mark. Buyers are trying their best to get it back above 222, but they're not going to take control until they're back at least above 231.65. At that point, they can begin filling the gap towards 241 to 242 and even move it to 247. To the downside, if Tesla comes back down to retest the 202.40 mark, there's a very good chance that Tesla is going to break right through that mark and fall further towards 191 to 192. So if you are taking puts, it is possible to take puts, have a stop loss just above 222.50, or you can wait for the confirmation below 202.40 to enter puts and hold them down towards 191 to 192. The next stocks on our watches are going to be Microsoft and Google. We will be getting into Meta as a live earnings reaction in just about a minute. But first, let's quickly talk about Microsoft, where you can see that the stock gapped up on strong earnings. And even though Google also came down with strong earnings, the stock fell. It in fact plummeted below the 100-day moving average. So what gives? Why did Microsoft go up and why did Google go down? primarily because of their cloud computing revenue. Microsoft reported a 29% jump on cloud computing, while Google actually missed their revenue for cloud computing. So the fact that the stocks reported earnings on the same day and one of them reported strong revenues from the cloud computing and the other reported weak revenues from cloud computing is the exact difference to why the stock went up and why one stock went down. So let's talk about Microsoft on the shorter term charts, where we can see that Microsoft obviously gapped up. During that gap up, and despite the market sell-off, Microsoft never broke below the 337 support. You can see that all day it tried to break below that level, but buyers continued defending it, which means that Microsoft has a major support at 337. If it breaks below, it can begin filling the gap towards 332, but we will not be bearish on the stock until it breaks below 323. We are bullish above 337, and we will continue being bullish for a breakout above 346.20. If it can successfully break that level, then our next price target is going to be around 352. Now, as far as Google goes, let's talk about its levels before we jump into Meta's earnings. Google, on the other hand, fell, and obviously it has a resistance at 128.50. That resistance comes from the highest point it reached today. You can see that it got rejected at this level here, which means that it will need to break above that level to begin filling the gap back up towards 133.80. Google to the downside has a support at 123.15, and it is already below that 100-day moving average, so it will need to break below that 123.15 for sellers to continue taking control and move it further towards 118. And the second price target below 118 is 112.94. Again, we will be updating these levels week over week, so make sure you're checking back in to see those updated levels. Now, the moment we've all been waiting for, let's talk about Meta's earnings. Meta just reported their earnings. Their earnings just came out a few minutes ago, and we can see that they beat on both top and bottom. Their revenue did jump 23%. However, their stock's move is still not enough to pay out those call or put buyers, and that is largely because of the implied volatility crush. So if you are holding calls or puts that expire on October 27th, you can see that implied volatility for these options is around 122 to 150%. They were right around 150% just a few minutes ago, and they are already dropping in value. Now, this is not reflecting in premium, but it is reflecting on implied volatility. Implied volatility measures the expected move up or down from a stock, and it translates to about $26 for Meta. So at an average volatility of about 150%, buyers and sellers, or the markets, are expecting a $26 move up or down, and so far Meta has not given that $26 move. In fact, it is looking like they are closing right around flat. Yes, they did have a very strong downside, and yes, they did have a very strong upside reaction, but so far it's looking like this Friday's premiums are going to be crushed because the move did not measure up to that $26 expected move, which is called an IV crush. Now let's talk about Meta's levels. Here in this case, we can see that Meta attempted a move back above 311 but failed, which is still our resistance. The move went as high as 316, so we're going to place another resistance there, and we're going to get rid of the 311 resistance. To the downside, Meta did have a support right around 298. However, it looks like it is breaking that support. It broke that support in post hours and came as low as 283 or 283 and 70 cents. So we're going to move our support to the downside right around 283 and 70 cents. So far, Meta's post-market move is very large. It did not create many supports and resistance points within this move. Therefore, the range is pretty wide and is not very friendly for trading. There will be more development from the stock tomorrow, so we will have more updates this coming Sunday on the stock. So thank you guys so much for checking in. Make sure you subscribe and like.